In this video, I'm going to look at a whole bunch of indicators that suggest that we may have reached the bottom of the bear market and that now we're entering the accumulation phase, which could mean that this is a great time to start picking up Bitcoin.
Using Wi-Fi without NordVPN could mean sharing your private stuff with more people than you think. NordVPN. Online security starts with a click.
The world's most advanced cold wallet for the new generation of cryptocurrency lovers. Descent.
Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits, and this is not investment advice. But I am going to look at several indicators that suggest that the Bitcoin price has bottomed out and we're now moving into the accumulation phase. Now, before I do so, please subscribe, follow me on Twitter, CryptoRichYT, join my official Telegram announcements channel, and please do subscribe to me on Odyssey if you're watching this on YouTube, because I post a lot more videos on Odyssey than I do on YouTube, and that's because of YouTube censorship. Now, you'll find the links to Odyssey, to my Odyssey channel below, but also you can see it above my head, bit.ly CryptoRichOdyssey. Now, before I look at the Bitcoin price and the indicators that suggest that we're moving into an accumulation phase, I want to show you a couple of indicators, just a little bit of fun. One is the fear and greed index. Let me move me out of the way. And this is a way of checking how much fear there is in the market compared to how much greed there is in the market. And traditionally, the fear is right at the bottom when people are like, oh my God, I've lost everything. It's all going to go to zero. And greed is when the price is at the top and people that aren't necessarily experienced or new to Bitcoin, they want to FOMO in. And that suggests that we're at a top. Now, we had a bottom here in the 15th of December, where the fear score was 11. Here at 16th of March 2020, this was the COVID drop. The score was 9. And lately, we had, in middle of June, the score of 6. This one here in the 20th of July last year, when the price was 29.9 thousand, we had a score of 19. But now lately, it's moving up to 39. So we're still fearful, but it's moving higher. And one of the things I noticed looking at this is that when it reaches a bottom, it doesn't really fall down again. It just keeps going up. Now, partly this is to do, or maybe wholly, this is to do with Bitcoin's cyclical nature, because every 4 years there is a halving of the new supply. And the next halving is in 2024. And traditionally, Bitcoin reaches all-time highs about a year after the next halving. So the last halving was 2020, and the next halving is going to be 2024. And I think currently there's 6.5 Bitcoin being produced, no, 6.25 Bitcoin being produced every 10 minutes, new Bitcoin. And after the next halving, it'll halve again. So it'll be 3.125 Bitcoin being produced every 10 minutes. Now, if you're an inexperienced hodler or an inexperienced trader or an investor, you might think, oh, and now is not a good time to buy Bitcoin because the price is low and really maybe it's going to go to nothing. Here's what I say. Buy and hodl. Certainly that's what I've done. And what you can see from this chart is that if you just did that, this is how long you'd be profitable for. You know, here, if you purchase Bitcoin with these red marks back in December 2020, until fairly recently, the middle of June 2022, you would be in the red. But it's only this period, 6 months. And then what happens is that these periods where you're in the red, like if you'd have bought here in November 28, 2013, well, pretty soon, at some point, Bitcoin goes past those all-time highs, and then you're in profit. So now, right now, given that the price is low, now would be a good time to buy and hodl. Buy and hodl a little bit. Don't put in any more than you can afford to lose, and come back in 4 years, 6 years, 8 years, and let me know how it's going. Now, the first indicator I'm going to look at is from this article from Cointelegraph.com, and this is the hodl wave. And what is the hodl wave? The hodl wave metric breaks down the supply according to when each Bitcoin last moved. The greater the proportion of the overall supply being stationary for at least a year, the closer the Bitcoin is to a macro bottom. And this is because hodlers like myself, I don't care where the price goes, I'm just hodling. I'm not going to move it out of my hardware wallet. And by the way, a hardware wallet is the best place to keep your Bitcoin because it's secure, it's offline, the private keys are offline, and it's the most secure way to keep your Bitcoin in your crypto. Check out the links in the description below for various hardware wallets. More importantly, a slowing of the 1-year hodl wave, indicating accumulation is calming down, followed by a start of a reversal, has always come at the start of a new long-term Bitcoin price uptrend. So let's look at the hodl wave chart. Just make it a little bit bigger, move me a little bit out of the way. Now this green line shows the prices, the green square rectangles show the bullish periods, the pink shows the bearish periods when price is going down. And then what we're looking for are rounded tops, like here in this pink orange line, which suggests that the hodl wave is rounding out, and those that were going to sell have sold, and there's only strong hands left that are just holding on. So here you've got it rounding out, and then you've got a bull run. Here we've got a topping out, rounding out, and then you've got a bull run. Here it's rounding out, which could indicate a bull run is coming, but before the bull run comes the accumulation phase. Now the accumulation phase can also be seen when you look at this chart, which shows the Bitcoin realized price. And I'll show you what that is in a moment, right? Which is here. The realized price goes below this line, goes below this line, goes below this line, and it doesn't really stay there, and it starts moving up, because you can see here it started to move up. Now what is the realized price? It is the value of all Bitcoins at the price they were bought divided by the number of Bitcoins in circulation. And why is it important? Well, it shows the economic state of the Bitcoin market at an overall level. And how is it useful? It shows when the market is under a period of distress, which can indicate price bottoms, and it indicates that Bitcoin holders are holding on to paper losses. And historically, these periods have occurred at major cycle lows. And this can be seen at these charts here, major cycle lows where Bitcoin hodlers are in paper loss. Not all of them, but just some of them, indicating a cycle low. Now you can also see it here on the 1 weekly Bitcoin US dollar chart from CoinMarketCap, from CoinTrader. This green line is the 200 weekly EMA. And you can see here that the Bitcoin price rarely goes below the 200 weekly EMA, and it does move up. Now here, what is this one? This is November 2018, when the Bitcoin price dipped to a low in that period of 3,200. And then here, this was when COVID lockdown started, March 2020. It dipped down for a couple of weeks. And now we have the June dip, where it's been below the 200 weekly EMA for 1, 2, 3, 4, 5, 6, 7 weeks. And it looks like it is trending upwards. So we're looking for a cross, which would be about $27,000. $28,000, and I've just drawn a chart here. This was below the 200 weekly EMA for 333 days, which if extended here would mean that the Bitcoin price would be above the 200 weekly EMA in about middle of October. Now it could happen sooner, and of course it could take longer as well, because in reality, with any trading and investing, price is either going to go up or it will go down, unless of course it goes sideways, which is why you shouldn't put in any more than you can afford to lose. Now, another indicator to consider is the TSI, the True Strength Index. This is a technical momentum oscillator used to identify trends and reversals, and it may be useful for determining overbought and oversold conditions, indicating potential trend direction changes via center line or signal line crossovers, and warning on trend weakness through divergence. So remember, in trading and in hodling, the trend is your friend. And what this shows is when a trend is likely to reverse, like how strong is the trend? If it's a really powerful upward trend movement, then it's going to likely to continue upwards. If it's a really strong downward trend movement, the price is likely to continue downwards. And if the trend is weak, then we could be at a reversal point. Now, this is from a tweet from Stock Money. I'll have all the links in the description below so you can go check out this stuff. And what it's saying is that here we can see a cycle end here, where the price touches this line, and also here the COVID crash, it's crossing, and here is looking like it's going upwards, which could be suggesting trend reversal as we move into the accumulation phase in preparation for the bullish phase. This is a tweet from Dav the Wav, and this shows the MACD, which is the moving average cost divergence, which is another technical indicator which signals possible reversals. And here you can see these bottoms, where the MACD has reached this point and then turned around. So it's, in 2015 it reached this low, and again in 2019 it reached this low, and here we are again at this low. And you can see the similar patterns here, that from the local high, from the recent high, we had a 30.382% reversal, which is a Fibonacci retracement, and here we had 0.382 Fibonacci level reverse, and here we have a 0.382 Fibonacci reversal. So which could be suggesting again that we've reached the bottom of the bear market and now the price is turning. Finally, this is from Aurelian Hayhon, and this shows reversal rounding patterns. And here's the reversal rounding pattern in 2019, before the price took off, here in 2020, and here again in 2022. And the other indicator that could be suggesting that we're ready for a price reversal is an increase in volume as more and more people move in. Now I'm recording this on Sunday the 31st of July, and by the time this goes out, prices may have changed a little, but we'll have an idea, because what would be interesting is the weekly close at the end of this week. Now Bitcoin's on track to close the week higher than last week, and this is on the daily chart. It's broken above the EMA ribbon. It's still below the 100 EMA, and this is the 200 EMA, so it's not quite bullish yet, but you can see it's crossing over and it's above the 50 EMA. And we could have a resistance at the 100 EMA and see where it goes there. There may be temporary setbacks, but I think the bear market is over. Now, I'm saying that just looking at technical indicators, not looking at what is going on in the larger economy and at a fundamental level, because there is some craziness going on at a fundamental level. We don't know what black swans may arise. That's the nature of black swans. And Bitcoin has never been in this sort of recessionary, stagflation economic cycle that we're currently in. Remember, Satoshi Nakamoto, they invented Bitcoin as a reaction to the 2008 crash. And now here we are on the cusp of another crash. And actually what I think we're on the cusp of a collapse of the monetary system, of the whole financial monetary system in the West. Now, if you want to know more about the state of the economy and what's happening, do check out my recent interviews with Tom Luongo and Alexander Mercouris. This is my Odyssey channel. I post a whole heap of stuff here that I don't post on YouTube, a mixture of politics and crypto. Let me know what you think. Are we moving into a bull market? Give me your comments, give me ticker symbols. Please follow me on Twitter, CryptoRichYT, join my official Telegram announcements channel. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich signing out. All the best. Bye-bye.